Like, what's something that you've learned since being in government that you kind of wish, I suppose, when you
I
were.
didn't know that. Oh, well, one, that it's all fake. That was really a very sad moment for me when I served on the House International Relations Committee, and the particular subcommittee, I think it was Western Hemisphere Subcommittee, was having a hearing, and the chairman of the subcommittee was there. I was on the subcommittee, so I was there. And then the committee or the subcommittee were interviewing, had a panel of witnesses that were being questioned by the subcommittee members. And it looked like it was a normal event. Then, all of a sudden, the um, chairman of the subcommittee, we sit down, we go through the hearing. The chairman of the subcommittee is fussing at the witness, and the witness is antagonistic toward the chairman of the subcommittee. So there's some friction, there's electricity, there's something happening in the air. After the hearing is over, the chairman backslaps the witness and they walk out together. It was just theater. Didn't mean anything. So that was like the saddest thing for me to realize that it was all just theater, didn't really mean anything. And that's probably the harshest lesson, but that's the realest lesson.
Chairman Gensler, your record of failures to protect investors and abuses of power make it clear that we need to restructure the Securities and Exchange Commission. The failures are many, but let me cite some of the abuses. You average more than 2 rules proposals a month. You provide inappropriately short comment periods. You have unworkable and unlawful ESG disclosure mandates on the market. You have essentially a Hotel California rule for crypto where you can check in anytime you like, but you can never leave. You have endless discovery with no resolution and no clarity for the captives in the market. You have unworkable proposals for overhauling equity market structure, a de facto ban on crypto through proposed custody rule. You have high staff turnover, unhappy people leaving your office, and unhappy companies and capital leaving our country. To correct a long series of abuses, I'm introducing legislation that removes the chairman of the Securities and Exchange Commission and replaces the role with an executive director that reports to the board where all authority would reside. Former chairs of the SEC will be ineligible under my proposed bill. And this isn't just my take. It resonates across the political spectrum. The American people want democratic access to capital, retail investor participation. You can't just exclude retail investors from markets and claim it's for their own good. Our markets need to function and flourish, and I yield back.
Chair Gensler, I have a lot of questions in a limited amount of time, so if you could keep your answers to either a yes or a no, that will allow us to get through as many as possible, sir. From your perspective, is it more difficult now for the digital asset industry to access financial products and services in the United States than it was, say, 2 years ago?
Sir, I'm not running one of those businesses. If they came into compliance, I think
reclaiming my time. The answer, sir, is yes. Do you think you and the SEC have had a role to play in that?
I think we have a role to protect the American investor and the capital markets. And
reclaiming my time, sir. You have played an obvious role in that. During your tenure at the SEC, how many rules has the SEC finalized that actually accommodate the existing regulatory framework and are specifically to the digital asset industry so the crypto market can come into compliance?
It's our rule books that are on the books for years, so we have not finalized any new rule specifically with regard to crypto. We've proposed some things in best execution. We've also...
Sir, reclaiming my time, the answer is zero. And how many enforcement actions has the SEC levied against digital asset companies during your tenure, sir?
I think it's probably 40 or 50.
The answer, sir, is about 55. My understanding is that the biggest crypto failure in history is probably FTX at $9 billion. Were you the chairman of the SEC when FTX collapsed?
Yes.
And how many times did you meet with FTX prior to their collapse?
I think my public record shows 2.
You met with FTX at least twice. And arguably, the second biggest crypto failure in history was Terra Luna. Who was the chairman of the SEC when Terra Luna collapsed, sir?
We had brought...
You were, sir. Reclaiming my time, you were. There are 5 members on the commission. Do you believe your speeches and interviews are to serve as the official position of the SEC?
I can only speak for myself when I'm speaking.
Again, sir, in a statement on the SEC website, you are quoted saying, the Kraken staking as a service enforcement action should make clear to the marketplace that staking as a service providers must register. But again, you haven't provided any rules for how that can be done. I must remind you, your public statements are not regulations. It's not responsible to expect the American people to assume your statements are a substitute for rules. Do you agree with this statement regarding the digital asset industry? The SEC needs additional congressional authorities to prevent transactions, products, and platforms from falling between the regulatory cracks.
I think that it's a largely non-compliant field. And
Sir, again, I asked you to comply with my questions, and I'm asking you if you agree with that quote. And I'm going to tell you, I'm quoting you from an August 3rd, 2021 article where you, and I believe you told Congressman Hill earlier that you need congressional authority to regulate stablecoins, and stablecoins happen to be a significant percentage of the crypto market. So the question is, when were you telling the truth? To Mr. Hill or to me? You've got to start answering these questions in a more transparent manner, sir. Does it concern you, by the way, that your approach to the digital asset industry is actually driving this industry out of the United States?
We're trying to drive it to compliance, and if they're not complying with the laws, then they shouldn't be offering their products.
Reclaiming my time. Madam Chair, I would like to enter into the record this Wall Street Journal article from April 14th, 2023, detailing China's ploy to open its banking system to crypto firms in an effort to seize an opportunity created by our hostile regulatory environment, which, Mr. Chair, you're a big part of.
Without objection.
Chair Gensler, FTX was domiciled abroad and so is Binance, yet American consumers still had access to both. You can't really think that pushing this industry abroad is going to protect American consumers when it hasn't several times in the past on your watch. You say the crypto market is rife with non-compliance. However, existing SEC rules make no sense for blockchain-based companies, and following them would actually kill these businesses. Your regulatory style lacks flexibility and nuance, and as a result, you've been an incompetent cop on the beat, doing nothing to protect everyday Americans and pushing American firms into the hands of the CCP. Your intention to work against SEC mission and put American investors in harm's way has been made very apparent, sir. It's been 1.5 years since you've appeared before this committee. You need to answer to Congress about the issues that you've had with the SEC staff union, the work environment you've cultivated at the SEC that's led to hemorrhaging of senior staff, the intellectual inconsistency of your regulatory treatment towards Bitcoin spot ETFs, and your politicization of capital formation opportunities through your treatment of certain SPACs. And that's just to name a few.
Speaking of crypto, commingling of funds, while we're on that subject, prior to the collapse of FTX, did you have any concerns with the company or question if they were breaking any securities laws or harming investors?
I think, if I might, I have had, since I've been in this job, a general concern about the field, and as expressed here today, about the non-compliance of this commingling of these various functions, and that they should come into compliance by separating exchange from broker-dealer from what you might call a hedge fund function and other functions.
So with those concerns, did you direct your staff to look into FTX?
I want to stay at a little bit higher level, but I directed the staff to look into the crypto intermediaries and a wide range of crypto intermediaries. Yes, sir.
Okay, so what did they find?
Well, we filed an action late last year, a number of actions, which are public actions with regard to Sam Bankman-Fried and FTX that are on our website. But what we found in those actions, as they show, is we allege a number of violations of the securities laws.
Yeah, when did you think FTX was problematic? At what point?
Well, again, we filed these actions in December, and I think we filed follow-up actions in January because it takes time to develop an investigative file, and we follow the facts and the law where they come. But I've given speeches, and I've been clear with many members of this industry that right now they need to come into compliance. We have one goal, is to bring them into compliance and to stop commingling all these functions, stop using customer funds as if they're their own. It's like somebody who's got their hand in the cash register because they say, I want to take some money out of the cash register for the weekend. I'll put it back later. And that's just not proper.
How long after you met with FTX and investigated, did you notify the public and investors that there was
Again, as we've chatted earlier today, we protect anything we do in our examination function, our investigative function. We protect that information and hold it confidential because it's important for the integrity of any investigation, but also for people's privacy. And often we find that we close investigations without bringing action. So there's a time-tested reason that you, of course, would want us to keep things confidential. So we only make them public when and if we either settle or bring charges.
Sad to hear that.
Well, if I could just note something about you mentioned your hearing about the recent events in the markets, and I would note there were 3 banks that failed in those handful of days, those 4 or 5 days. And 2 of those banks, the first and the third that failed, Silvergate and Signature, were engaged in the crypto business. I mean, some would say they were, crypto banks. And the third, the biggest, Silicon Valley Bank, actually, when it failed, you saw this country's, the world's second leading stable coin, had $3 billion involved there, DPEG. So it's interesting just how this was all had some crypto narrative as well.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we had Gary Gensler in the house. Crypto is not in compliance. And guys, we know this is all rehearsed, all a movie. We know he was meeting with FTX, the bank man, and also the CFTC was meeting with the bank man. We know Luna collapsed under Gensler. Celsius collapsed under Gensler. And we know him, the Fed, and the Treasury knew what was going to happen because they were starting to raise rates and shrinking liquidity. And we had Congressman Posey had Gary Gensler up against the wall. But he let him go. Guys, this is how you know this is all rehearsed. And he clearly asked Gensler, did you send anyone to investigate these fallen companies, especially FTX? And Gensler had no answer. And we know the SEC didn't come out to Bankman until December of 2022, after all the smoke cleared. And we know why. Remember, guys, the Bankman was working on derivatives along with the CFTC, which are legal on blockchain ran by an algorithm. Remember, derivatives market, you're talking about $100 trillion market. Don't forget, guys, this is all part of a plan. And that's the reason why they're driving a lot of these projects outside the United States. And we see China using Hong Kong to get back into crypto. And we know Binance's name keeps coming up. And we know this banking crisis is going to be used to destroy the current banking model. And we had Gary Gensler bring up Silvergate and Signature. And we know Signature didn't have to close, but it was one of the casualties of war. And then Gary Gensler talked about SVB, and then he threw in Circle as far as a stable coin. And guys, we know when it comes to SVB, the Fed and Peter Thiel calls it all. It was part of the bigger plan. I brought you the FDIC video. They've been planning it for 10 years. Remember, guys, this current banking model doesn't work because we're going to have instant settlement. It's going to knock out billions and billions of dollars of fees. But we know the NWO is going to play the Hegelian dialectic. They're going to use crypto in order to destroy this banking model and then bring crypto back in as a solution. And remember, the crypto teacher told you because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.